Hi traders, this video will take a look at the trading week that began last Monday in relation to a common mistake that many inexperienced traders make when attempting to trade the news. Up on the screen here is an H1 chart. Now the weekend preceding Monday the 22nd of July saw a couple of headlines that seemed to excite many gullible gold traders. Novice traders in particular were sucked into suicidal action by fly-by-night signal providers and pseudo-analysts on social media who confidently stated that a parabolic move higher for gold prices was set to kick off on market open because of the Israeli military attack inside Yemen that Saturday and Biden's announcement on Sunday that he was dropping out of the US presidential race. The market opened with a gap and steered FOMO traders into a manipulation play with a short-lived bull pump. Price then took a bearish leg down for the best part of the remaining day, taking out the stops of those who had gone long at market open in the hope that price would immediately shoot up to another all-time high. Retail traders misread the headlines because the market is not interested in the Israeli tit-for-tat with the Houthis in Yemen, because the real powder keg in relation to a wider conflict in the Middle East is an all-out conflict between Israel and Hezbollah. As far as the US elections are concerned, the market is largely ignoring it, partly because they already had a book on Biden pulling out, and with Wall Street expecting a Trump win, he is simply too unpredictable in terms of the correlation between what he says and what he'll actually do as president. On Tuesday, we saw a typical manipulation play by the market, where price tracked back higher before a deep pullback, at which point the previous weekend's headlines were now just a footnote in the trading journals of traders who got chopped up on Monday, thinking that trading the news is money for old rope. There are two components to news that give it its value. Firstly, the earlier the news is received, the more valuable it is. Timing is everything. Always remember that breaking news is nothing of the sort. Unless you're trading for a major financial institution, a subscription to Bloomberg or one eye constantly on the BBC or CNN websites won't give you the kind of advance heads up that they have. The market always thinks well in advance of retail traders, and they do that because they get the news earlier. Secondly, the less people that get the news, the more valuable it is. Headlines are not always the main trigger behind a market reaction, and sometimes it's the details that are more important, but they can either be difficult to find or only available to insiders. Some retail traders will on occasion get lucky and grab a few scraps from the market, even though they've gotten late into the correct slipstream of a news-related market reaction, because the momentum is so powerful. But on other occasions, the market will either make an active manipulation play when the headlines are made public, or they might not react at all and wait for traders to get as far away from base as possible before getting into gear for the opposite direction. We have a very interesting remainder of the year, with lots of potential headline-grabbing news events on the horizon, so please bear in mind what we have discussed in this video. Head over to our Telegram channel to see how we are trading this secular bull trend and how we bought from strategic dips last week and stayed out of the chop. Thanks for watching, and please don't forget to subscribe and leave a comment. Good luck with the week ahead.